John Maynard Keynes wrote, "Worldly wisdom teaches that it is better for reputation to fail conventionally than to succeed unconventionally." The profound wisdom of Keynes's statement reaches into every nook and cranny of the investment world. Slavishly following conventional wisdom proves unwise, as the frequently trod path often leads to disappointment. Taking a well-considered unconventional approach generally proves sensible, as the less traveled route provides greater opportunity for success. Contrarian investing. Pursuit of non-traditional strategies poses significant challenges for investors. Human nature prefers the comfort that comes with pursuing a time-honored strategy. Sharing a common outcome with large numbers of fellow citizens creates a mutually reinforcing social bond. Unfortunately, the comfortable rarely produces success. Millions of mutual fund investors sleep well at night, serene in the belief that superior outcomes result from pooling funds with like-minded investors and engaging high-quality investment managers to provide professional oversight. The conventional wisdom ends up hopelessly unwise, as evidence shows an overwhelming rate of failure by mutual funds to deliver on promises. A non-traditional approach leads to greater likelihood of investment success. Unconventional Success. A fundamental approach to personal investment recommends that investors engage not-for-profit fund management companies to create broadly diversified, passively managed portfolios. Note that most mutual fund assets rest under the control of for-profit management companies. Not-for-profits represent a contrarian alternative. Note that most individuals' portfolios contain result-dominating allocations to domestic marketable securities. True diversification represents a contrarian alternative. Note that most mutual funds attempt to beat the market. Market-mimicking strategies represent a contrarian alternative. In the eyes of public opinion, the contrarian investor faces a lose-lose proposition. When contrarian approaches fail to keep pace with the current market darling, more fashionable players mock the out-of-step independent thinker. When contrarian approaches surpass the alternatives, consensus-oriented players decry the irresponsibility of the unconventional investor. Regardless of the investment outcome, out-of-the-mainstream investors receive cold comfort from outside observers. Contrarian investors require conviction to implement and maintain an unconventional portfolio. Without a rock-solid belief in the fundamental principles that undergird an intelligently crafted portfolio, weak-kneed investors face the likelihood of a disastrous whipsaw. By abandoning an unconventional strategy in the face of poor performance and implementing a conventional alternative after a run of strong investment results, investors sell low and buy high. At some point after the garden variety investor abandons the unconventional, rationality prevails. The recently oh-so-attractive conventional alternative falters. The recently out-of-favor contrarian portfolio shines. Investors who sold low and bought high suffer the consequences. In its most basic form, the message of unconventional success requires only a few pages to describe the blueprint of a well-diversified, equity-oriented, passively managed portfolio, using not-for-profit investment managers to implement the plan. Unfortunately, a prefabricated version of the recommended strategy provides scant assistance to time-constrained investors. Investment success requires the conviction that comes from a fundamental understanding of the rationale for building the portfolio to certain specifications. Unless investors truly believe in the efficacy and validity of an unconventional approach to asset management, the end result almost certainly fails to withstand the wear and tear of market forces. Thoughtless, knee-jerk, contrarian responses ultimately generate results as dismal as the conventional alternative. Consensus-driven strategies frequently produce attractive returns for extended periods of time, placing the fickle contrarian in a difficult position. Complicating the contrarian